Jeremy Batstone-Carr is a Director of Private Client Research at Charles Stanley and joins us live from London. Do you agree with that summation? Is it a combo of political paralysis and fear?
Yes, I agree with it very much. I think that what we're facing is, if you like, a continuation of the crisis that first began in 2008. Then, of course, there was a systemic risk to the global financial system, the response to which from the authorities was essentially to transfer substantial amounts of debt to the public sector. This has therefore left many countries in the West with substantial debt burdens, has contributed to the sovereign debt crisis in Europe, and as a consequence of having fewer levers to pull in order to save us now, there is a risk that growth will disappoint too.
Okay, we're looking at the markets. It's not a pretty sight. Numbers are dropping through the floor. How far do you think this is likely to go?
Well, we're certainly in what might be termed correction territory, a fall of between 10 and 20%. How far might they fall? Well, whilst many normal economic levers, one might say fiscal policy levers, are now not at the authorities' disposal, there is still monetary policy. We've seen a pancaking in the US bond yield curve, which may just give the quiet man in all this crisis, Federal Reserve Chairman Ben Bernanke, the scope he needs to perhaps participate in a massive intervention to provide the markets with liquidity, which seems to me to be severely lacking.
Okay, there's talk of another recession looming in the US. What impact do you think that's going to have then on Europe? If the US is struggling at this level, what chance for Europe?
Well, I think that it's a little early to say that the US is definitely going to go into a recession, but it's certainly fair to say that key economic indicators have been extremely weak over the course of the past couple of months or so, which has raised fears that maybe the country could be heading towards a period of negative growth. Now, the US is the largest economy in the world still, at about 20% of global GDP. Therefore, what happens in the United States has significant ramifications elsewhere in the world, both in terms of the interlinkages that exist in the financial system and, of course, in terms of what might be described as the gossamer-like global trade situation, extremely fragile, very, very tense, dependent on a number of factors, not least of which the US dollar. And one has to say that if US activity were to slow, there would clearly be a knock-on effect elsewhere.
Okay, Jeremy, good talking to you. Thanks.